You finally did it. You have $100,000. Maybe it's an inheritance, a bonus, the sale of a house, or the result of years of relentless saving. That number, $100,000, is sitting in your account. And the question screaming in your head is, what now? What do I actually do with this? Do you buy a fancy car? Put a down payment on a house? Throw it all into the stock market and hope? Or does it just sit there, slowly losing value to inflation while you stress about making the wrong move? That $100,000 isn't just money. It's a tool. It's a key. And today, we're going to map out exactly how to use that key to unlock doors you might have thought were permanently closed. This is a practical, step-by-step guide on what you can really do with $100,000 in 2026 to build genuine financial freedom. First, let's address the elephant in the room: mindset. For many people, a windfall like this triggers a scarcity reflex. You clutch it tightly, afraid to lose a single dollar, or a spending frenzy kicks in, the treat yourself mentality that leaves you with nothing but regret in 6 months. We're going to bypass both traps. We're going to adopt an investor's mindset. This money is a soldier in your army, and your job is to deploy it where it will work the hardest for you. Your mission, should you choose to accept it, is to transform this lump sum into a lasting source of security, income, and growth. Before we invest a single dollar, we need to fortify our financial foundation. This is non-negotiable. Think of it as building a castle. You don't start with the fancy towers. You start with the moat and the thick, impenetrable walls. Wall number 1 is your emergency fund. If you don't have 6 to 12 months of essential living expenses saved in a safe, accessible place, that's your first assignment. In 2026, the best place is a high-yield savings account. With rates offering yields around 4% or higher, your emergency fund can grow while it protects you. This means when life inevitably hits you with a major car repair or a job loss, you don't touch your investments. Wall number 2 is destroying high-interest debt. This is perhaps the most powerful investment you can make. Let's be brutally honest. Carrying credit card debt with an APR of 20% while trying to earn 10% in the market is a losing battle. Paying off that debt is a guaranteed risk-free return of whatever that interest rate is. So if you have any debt with an interest rate above, say, 7%, use a chunk of this $100,000 to wipe it out. Okay, moat dug, walls up. Now we can start building the castle itself. This is where we put your money to work. We're going to move through a spectrum of options from the essential and conservative to the more aggressive and entrepreneurial. The first pillar of wealth building for most people is the retirement account. If you have a 401k with an employer match, not maxing it out is leaving free money on the table. For 2026, you can contribute up to $22,500 or $30,000 if you're 50 plus. Use part of your $100,000 to max that out for the year if your cash flow doesn't already allow it. Then, look at an IRA. This is your tax-advantaged fortress for long-term growth, and that leads us to our most powerful wealth-building tool, the stock market. But I'm not talking about picking individual stocks, unless that's your dedicated profession. For 99% of us, the smartest path is through low-cost, broad market index funds and ETFs. These funds track the entire market, like the S&P 500, giving you instant diversification with virtually no management fees, which is critical because fees can eat up hundreds of thousands of dollars over decades. With $100,000, you can build a rock-solid portfolio. Maybe it's a classic 60-40 split between stocks and bonds, or consider a 40-30-30 portfolio, 40% stocks, 30% bonds, 30% alternative assets, which can offer better returns with lower volatility in inflationary times. The point is, you can buy a slice of the global economy and let compounding do its magic for the next 20 or 30 years. Now, let's talk about a tangible asset class, real estate. You might think $100,000 isn't enough to buy a rental property, and you're probably right. But you don't need to be a landlord to invest in real estate. This is where REITs and platforms like Fundrise come in. REITs are companies that own and operate income-producing real estate, apartment complexes, shopping malls, hospitals. You can buy shares of them just like stocks, and they are required to pay out most of their income as dividends. Some yield 5% or more, providing a steady passive income stream. It's a way to get exposure to the real estate market without dealing with tenants or toilets. Let's dive into a less traditional but increasingly accessible option: private credit. This was once the playground of the ultra-wealthy, but platforms have opened it up. Private credit involves lending money directly to businesses that can't or don't want to get loans from traditional banks. It can offer attractive yields and, as part of a diversified portfolio, can be that alternative asset slice we mentioned. And speaking of alternatives, the world has expanded. Through platforms like Masterworks, you can invest in fractional shares of blue-chip art. Or consider Series 1 bonds, which protect against inflation and are about as safe as an investment gets. These aren't core holdings for most, but for a portion of your $100,000, they can add unique diversification. But what if you're not just an investor? What if you're a builder? Then perhaps the most powerful thing you can do with $100,000 in 2026 is to start or buy a business. This is the highest risk, highest potential reward path on this list. It's not passive. It will consume your time and energy. But $100,000 is enough capital to properly launch an online business, buy an existing small franchise, or acquire a profitable digital asset. This path isn't about market returns. It's about creating an asset that could eventually be worth millions. A less risky but equally valuable investment is in yourself. Use $10,000 or $20,000 to acquire a high-value skill, get a certification that boosts your earning power, or even take a sabbatical to plan your next career move. Increasing your human capital is an investment that can pay dividends for the rest of your working life. Finally, consider the power of giving. Allocating a small percentage to a cause you care about can create profound personal satisfaction. It reinforces an abundance mindset and connects your financial success to a larger purpose. So, what's the final playbook? There is not one single answer. The right move depends on your age, risk tolerance, goals, and personality. But a smart strategy for 2026 might look like this. First, shore up your foundation with an emergency fund and kill high-interest debt. Then, max out tax-advantaged retirement accounts with low-cost index funds. Allocate a portion to diversified stocks and bonds, perhaps using that 40-30-30 model. Dip into real estate via REITs for income. Consider a small portion for alternatives or private credit. And if you have the entrepreneurial itch, dedicate a portion to starting that business or investing in your skills. The worst thing you can do is nothing. Letting $100,000 languish in a checking account is a slow-motion financial mistake. The second worst thing is acting on impulse without a plan. That's what we've built today, a plan. Your $100,000 is a seed. You can let it rot. You can spend it on something that wilts. Or you can plant it in fertile soil, water it with patience, and let it grow into a tree that provides shade and fruit for decades. The choice and the power is yours. If this clarified the path forward, hit the like button and subscribe to Frankie Finance. In the comments below, tell me, which of these strategies resonates with you most? Are you the index fund investor, the future business owner, or a mix? Remember, financial freedom isn't a lottery win. It's a series of smart, deliberate decisions. You've just been handed the resources to make one of the biggest decisions of your life. Make it count. Thanks for watching, and I'll see you in the next video.